So this is the no fluff guide to opening a business, starting a business in Portugal. Again, the goal today is really to just knowledge dump everything that I think that you guys need to know to successfully. There's a lot of things that are unique to Portugal or unique to the EU when you start a business, that if you're coming from the UK, you're coming from the US, in the European Union, is going to feel really foreign and different, and you might not know about it until it's too late. And so the more we can kind of prepare you up front, the better. And I think the more confident you can kind of move through the process kind of on the journey here. So there we go. Who's going to be presenting today? So my name is Jaysin. I'm the owner of LDA Accounting. I'm not Portuguese, and I'm not really questionable why you guys are here and why you're listening to me. So my background is actually entrepreneurship in the US and some consulting in the US. And when I came to Portugal, one of the things that kind of stood out was that we really wanted a service that felt more similar and more familiar to what I was used to in the US. And so we built Elevate Accounting specifically to help people who do business in Portugal, because like I said, it is a lot different and there are a lot of questions, and just kind of having a more familiar touch point, understanding and being able to identify and then giving an experience that is more similar again to what we are used to in the US. That's really the goal of Elevate Accounting, and why we're here. So up to this point, I've already met with hundreds of people who are expats doing business in Portugal or starting a business in Portugal. So I've literally had the conversation I'm about to have now spread out across hundreds of conversations. And so I've had this conversation in a lot of different ways, but never in one consolidated. That Reis is also going to be joining us from Reis and Pellicano. So Daniel is actually a dual citizen between Portugal and Canada. He has lived in the UK and a partner at Reis Pellicano. Their law firm specifically helps international clients across a broad range of issues, from business, real estate, kind of you name it, they help with it, golden visas, etc. Daniel's been a huge help to us with a lot of our clients as well. And so it was really nice to be able to partner with him on this, deep into the employment side of things and what you need to know so that you can hire, terminate, and maintain employment relationships legally and hopefully with fewer headaches down the line. Okay, I like to call this the please don't sue us slide. So just a reminder, this webinar is for information purposes only. We're trying to help. We're trying to give you as much information. But please remember that you should always consult an attorney, a tax advisor, an accountant to talk about your specific situation before you make any major decisions. This is for informational purposes only, so please don't sue us. Okay. Whoa. Woo. You guys get the sneak peek. Pretend you didn't see that. All right. Here's what we're going to cover today. So I'm going to start with a reality check. I think there's a lot of information out there that is maybe skewed one way or the other, and so very opinion-based, but I want to do a quick reality check in terms of where I see business in Portugal today. We're going to talk through opening an LDA versus using independent activity, which is very important. Going down the LDA creation process. So actually talking about, okay, if you do want to start a full limited company, how does that work? What does it look like? We're going to talk about expense and sales invoices. As you can see, they're super important. Daniel is going to cover hiring, firing, and navigating employment law. We're going to talk through taxes, different type of taxes, how they're calculated, how they work, and then we'll finish with Q&A. So we'll have a full Q&A session at the end. I'll also stop kind of throughout the presentation to ask if there's any burning questions as we go. All right. So first, let's do a quick poll. I only have 4 polls, so don't worry, it's not going to be too crazy. But I do want to see, compared to the people that signed up, the people who actually joined are a different group. And so I want to see specifically where you guys are at with your business journey. So you should have on your screen now a poll where you can select kind of where you're at in the game. And then I'll be able to see your results here in just a moment. So I'll give you a minute to make your choice. And maybe in your chat window, I think, depending on how you joined. Here we go. All right, get a few responses in. I'll give a few more minutes. All right, so looks like actually over half of the folks on the call here actually have their business open. 33% are definitely going to start, but they haven't registered yet. Which again, you're in exactly the right place right now. 17% are researching, figuring things out before they get started, which is great. Okay, that is very helpful because it tells me where we need to spend our time. Okay, so let's do a quick reality check on in terms of kind of the business realities in Portugal. So one of the things that we see a lot is kind of promotional pieces, right? You see all those blog articles or Instagram posts or whatever. They talk about how easy it is to do business in Portugal. So here's an article that's talking about Portugal's ranked the 25th in the world, which reasonably, there's a lot of countries in the world. So 25th, pretty good. I looked, I couldn't actually find this article that's referenced. Sorry, I guess the study that's referenced in this article. But I did look up, so in 2020, the World Bank Group did a similar study, ease of doing business. Portugal was number 37. Again, this is 2020, so it probably has improved over those 6 years. The US was number 6, and the UK was number 8, versus Portugal, maybe 25, somewhere in there. So I think that's great, right? It's moving in the right direction. The disclaimer that I'll give you, because you guys are talking about doing, you're thinking about doing business, and I want you to come in with kind of open eyes, is that you're going to feel a difference between number 6 or number 8 and number 25. Imagine using a search engine and you're used to using Google, and then you're going to use number 25 or number 15 or whatever it is. There's going to be a big difference there. And so that's the bad side. It's like, okay, it's going to be harder to do business than most likely what you're used to. The good news is that applies to everyone. And so if you can push through that difficult part and you can get through the admin and through the headaches, basically, it almost gives you a moat around your business because it's not easy to get started. And it can be a lot to figure out and a lot to get through. And so if you can get past that, it actually becomes an advantage for you. So just think about that in terms of kind of the reality of doing business. The next one, there's a lot of opportunity in Portugal. This one, I strongly agree with. There are a ton of people who are moving to Portugal who want new services. They want kind of the new shiny thing. They want the levels of service, the products that they used to use in their previous country. There's a huge startup scene. So we're getting more and more technology businesses, people who are interested in technology, consultants, all coming to Portugal. And the quality of life here, obviously, if you live here, quality of life is fantastic. So if you're going to set up a business that you're realistically going to work at remotely anyways, this is a great place to do it. And the more people that we have like that, now you have a second ecosystem of businesses to support those people, right? So I really believe that there is a ton of opportunity in Portugal. Again, if you can get past the bad times to do business. So this is something I actually very strongly believe in. Okay, the last one. I hear this a lot. So if you're from the US or the Netherlands, it's very common, let's say you have a consulting business and maybe you work independently even, very common to create a limited company like an LLC or an LDA and run your business, kind of charge your clients through that limited company. And so a lot of people move to Portugal and the first thing they do is they start an LDA because it can be easy depending on the situation. And what I would say here is it's a maybe. So we're going to talk through this and when it might make sense to do one versus the other, but definitely don't blindly go in and create an LDA because you used to have one in your previous country. In Portugal, you really want to think through the pros and cons of that. And we're going to talk through this. Okay, second poll, again, there's only 4, so don't worry. What is your biggest concern about starting a business in Portugal? And you guys should see that on your screen in just a moment. This is going to help me understand where I should spend more or less time here. Taxes, go figure. And I'll give a few more minutes. Okay, let's look at the results. So most common is all of the above. You have questions on everything. That is not uncommon. Understanding the requirements to run a Portuguese business, perfect. We're going to go through that. Understanding taxes, we'll go into that, and then if there's questions afterwards, obviously, not too specific, but if there's questions in general afterwards, happy to go through questions there. Employment law, Daniel's going to be all over that, so no worries. And then understanding the structure, which is what we're about to jump into, so perfect. Okay, so let's talk about LDA versus independent activity versus sole proprietor. So independent activity, sole proprietorship, essentially the same thing in Portugal. So you are working in your own name. There's no separate legal entity. You are working for yourself. And there's pros and cons to doing that. Limited company, LDA, is your other option. So let's start with the LDA because I think that is something that everyone is relatively familiar with. So an LDA in Portugal is a limited company. It is the same idea as an LLC in the US, an LTD in the UK, BV in the Netherlands. You get the idea. So it's a separate legal entity from the owner, completely separate. In Portugal, there's actually even a greater degree of separation between the individual and the company than you might see in another company, or country. I'll use the US as an example. So in the US, you might have an LLC, but they call it a disregarded entity. So it is a separate entity if you get sued or something, but they still know that it's really just you, right? In Portugal, it's completely separate. So for example, if you as a business owner loan your company money, which is very normal, like you're low on cash and you send money into the business, you're actually going to want to set up a contract between yourself and your company, and you'll be the only person signing both sides of the contract to make sure that it's actually documented and done correctly. So again, they're very, very separate. So truly think about it as if it's a different company that's not associated with you. So again, same kind of rules apply. So liabilities are limited to the business itself, and that does not include VAT and Social Security. So if you have debt that you owe basically to the government, that's the only thing that will follow you from your business to you personally. With the LDA, you always have to use organized accounting. That's something that we're going to talk about in just a minute, but just remember that. New flat tax rate in 2026 of 19%. And so the best time to consider an LDA is when your revenue is over 200,000 euros. You have employees, and I call it a fully operational business on the slide, but really it's like if you are a complicated business, if you have a lot of moving parts, that's really when an LDA makes more sense. Independent activity. Okay, so this one goes by a lot of names. Independent activity, sole trader, green receipts, independent activity twice. Sole proprietorship, empresario non individual, and residuos verdes. There's probably more that I forgot, but there's a lot of names. It's all talking about the same programs. And so with independent activity, there is no separation between the business and the owner. You guys are the same, one and the same. Your bank accounts can be the same, but they should not be. You should always have a separate bank account for the business. When you get an expense invoice, you're putting your own on the document. You are the business. And so this is taxed on basically the coefficient, which is the estimated profitability that the government has. We're going to talk about this in a following slide. And the progressive tax rates. So again, we're going to talk about this in a second, but it's taxed differently than an LDA. And you can choose between simple or organized accounting, which again, I'm going to talk about in just a minute. So independent activity, this is really something that you should consider when things are simple, right? You're working on your own. It's a very very concise business. There's not a lot of moving parts. And importantly, your expenses are less than your coefficient, which we're going to talk about in a second. And actually, I'm going to go back just a second with the LDA. I remember there was a question that was mentioned during registration. Somebody said, should I choose an LDA or a unipostal? Those are the same things. So an LDA is or can be a unipostal. That just means that there's only one owner of the LDA. So I meant to mention that on this slide. Okay, so we talked about organized accounting versus simplified accounting. Organized accounting is traditional business bookkeeping. This is what you're used to doing, in QuickBooks or in Xero or whatever it might be. So every transaction is categorized, organized, your revenue, your expenses, and you pay tax based on the net profit. That's organized accounting. The good thing is you're paying tax on exactly what you owe. You're expensing your deductible expenses. The bad thing is that it's more work. It's more expensive to do. Simplified accounting, the government put in place basically to kind of give an easy option for business owners. And so rather than saying, okay, in organized accounting, you're looking at every single transaction. Simple accounting is saying, okay, you're doing whatever the type of role it is. And depending on the type of activity that you have, we'll actually look up and there's a corresponding coefficient. So as an example, for professional services, everything from like a photographer to an architect to an accountant to a consultant to somebody doing IT work, it's all professional services. The coefficient is 75%. And that means they are going to assume that out of everything that you invoice, 75% is taxable income, 25% are business expenses. So they're kind of guessing what they think your business expenses are going to be. And so that way you're not tracking each and every transaction. They're saying, yeah, you do that kind of work, we're going to tax you based on kind of this general idea of how profitable we think you'll be. You may need to show proof of some expenses. We'll talk about that in a minute. And the key thing here, and this is kind of the gotcha, is that you are taxed based on your coefficient, regardless of what your actual net profit is. So I'll give you an example. I met with somebody, and she was doing, we'll say she's doing home services. So it's a professional service. But her business model was that she would get the client and then she would hire somebody else to go do the work and she'd pay them 80% of the amount that she charged. And then she'd still have her office and her website and everything, all these other charges. So she's getting taxed, assuming that her profit margin is 75%. Her real profit margin was like maybe 10%, very, very low. But her tax is based on 75% of her income. So her tax bill is going to be enormous, right? And so when we talk about like thinking about what structure makes sense for you, that example is exactly why you need to really think through how this works. Because for this woman, she even said it when I was speaking with her, she's like, I just wanted to get started. Like her personality has always been get started, figure it out as you go, which normally works. But in her case, she made a very bad decision to use simple accounting when her expenses are dramatically higher than her coefficient was, because she's still going to pay a tax on that coefficient, on that assumption of having 75% profit margins. Okay, so let's talk about some common coefficients. I use professional services as my example. So the coefficient is 75%. That means that they assume 25% of everything that you invoice is going to be expenses, and 75% is going to be your taxable income. Hospitality, so retail, restaurants, hotels, 15%. So they assume that 85% are expenses and that your profit margin or your taxable income is 15%. Short-term rentals, 35%. And then intellectual property, crypto, etc. Is a very high coefficient of 5% and 95% taxable income. So again, for your specific situation, you want to know what that is going to be, so you know what applies to you. All right, so wrapping up this section, we look at independent activity versus an LDA. So in terms of being easy to start, independent activity, you can do it very, very quickly. You can manage your independent activity on your own as long as you're using simple accounting. You can do it on your own. If you're using organized accounting, you always have to have a certified accountant by law. So independent activity, very easy to start. LDA, expect a few weeks to get that up and running. Ease to manage, again, independent activity is made to be simple. LDA is going to be more complex, have more administrative work. Taxes, this is a big, it depends. It depends on your situation, whether organized accounting and an LDA or independent activity is going to be your best option. So the way, kind of the shortcut that I would think about this, and it's not perfect, is that if your income is less than 200,000 euros per year and the business expenses that you expect are less than that coefficient that we were just talking about, then independent activity is probably going to be your best bet. Because independent activity, think about it, if we go back, let's go back here. So let's say that you're doing professional services, you do consulting online. They assume that 25% of your expenses are, or sorry, 25% of your revenue are going to be expenses. And so you're only going to pay tax on 75%. That's fantastic if your actual expenses are lower than 25%, right? You're getting this huge tax break. And so that's where it can actually be very powerful to use simplified accounting if your expenses are lower than the coefficient. And so that's something really to think about. The flip side of that is that the government gives you this assumption up until about 25,500, more or less. After that amount, they go, you know, when we were talking about that whole coefficient, like we'll stick to it, but we're talking about a lot of money now. Let's say you're making 150 grand. Like that's a lot of potential tax money that they're giving up. And so they say, okay, we said we'd give you the coefficient, and we still will, but we want to know that your business expenses are actually somewhere near that threshold. And so we want you to show at least 15% of your total invoices. We want to see those as business expenses. If you can prove to us that you had 15%, we'll give you the full 25, no more questions asked. So that's also something to keep in mind as you're looking at this simple accounting, the independent activity with simple accounting, is that it can be very tax advantageous. If you have a high income above 25,500, you're probably going to need to show at least 15% of your revenue as business expenses. And there's different things that can be used along the way. So if you're working from home, you can use a portion of your lease, your utilities, those kinds of things. Details on that are for a different conversation because it gets complex. But just know that that's something that you might actually need to do if your income is higher. Okay, and then so taxes, again, can be much better on independent activity. With an LDA, it could be better. You are actually getting taxed on your true net profit. That's very important. You have the ability to use dividends. There's some different programs in place that might make income through an LDA more attractive. So taxes, which is better, is very situational. Ease to close. Independent activity, again, it's very easy to open, very easy to close. LDA, usually you're going to need an attorney, and it's usually going to take several weeks. They have to verify that because, again, the LDA is a completely separate legal entity. They want to make sure that the LDA doesn't have any debt. There's nothing that's going to come back and bite it after the business is closed. So it takes several weeks to go through the closing process. Okay, before we do that, let's pause for a second for questions. Anna, do we have any questions? I'm going to pull up the chat window here.
I don't have any questions, but Sarah has her hand up.
All right, Sarah, if you want to just put the question in the chat window here. Oh, she said that people are trying to join. Oh, okay, looks like Anna already did it. All right, thank you. Okay, we'll keep on moving on. So, quick poll, what type of business are you starting? Again, this will help me give better examples as we go here.
Jaysin, Lydia also has a hand up if you want to have.
Sure.
If people can put the questions in the chat, it will be much easier for us to answer.
And I just saw a question in the Q&A section as well. Not everyone can use the Q&A section, which is why we say to use the chat. This is getting recorded and we will be posting it on YouTube. And then I'll be sending out a PDF of these slides as well. Okay, so looks like a lot of professional services. So I'm glad we talked about that before. Freelancers, consulting, professional services, 52%. About 10% e-commerce or online. And then an even split of technology and software and physical products. Excellent. Okay, so the business creation process. So now we're going to talk specifically about creating an LDA. Because again, independent activity is relatively easy to create on your own. LDA, you're creating a completely separate legal entity, and it's a bit more of a process. So there are three options to creating an LDA. So one is the done for you option. This is when you work with an attorney. So I know that Daniel's firm does this. LDA Accounting does this. We partner with an attorney to do it for you. But basically, they'll collect the information from you. They'll work with the government to have the business created. They'll create all the documents that you need and then give it to you. So it's going to feel much more like a package deal. And you don't have to go to, you can do it all remotely. You don't need to go into an office. You don't need to go to the government building, etc. This is truly kind of a done for you option. You can do it online. I have not personally done this process, but I know that it should be, it is doable. I just don't know what the actual experience looks like. And then you have the Impresa no Hora office, which is in person at usually a cameo. So we're actually gonna start with the last option first. So Impresa no Hora. You can find this in certain government offices. You do need to look online. You need to Google it and figure out which one is closest to you. I'd say it's very important to call ahead. A lot of times, even if there is an office, it's not staffed. They may only take a certain number of appointments per day. They may not be in that day. So it can be kind of hit or miss. This is best really when it's a simple business. You're a resident here, you're starting a business. You can do it with maybe one partner who also is here in person and is, again, a resident in Portugal. I think usually when this is easier, it goes better. If you try to create a complex business, so for example, you want to have corporate ownership of that business, it's either not going to be doable or it's going to be very difficult to do. Total fees come out to about 360 euros, but you're still going to need to get a document called the RCVE document. And that's the document that says who the beneficiary of the business is from an attorney. So it's 360 to get it created and expect probably a couple hundred extra to get the RCVE. Online. So again, this is similar process to the Impresa no Hora. You need to be, I believe, either a citizen or if you are an expat like I am, you need to have your chave digital in order to go through this process. Again, I would encourage this more for simple businesses that are very straightforward in terms of ownership. The total fees, again, come out to about 360, and you're still going to need to get that RCVE document from an attorney. You won't be able to open a bank account or really take any next steps until you have that RCVE document. So that's option number 2. And then again, working with an attorney. So again, if this is a complex business, I would recommend working with an attorney. Everything is done for you, so it takes the work off your shoulders in terms of actually going and handling the bureaucracy or meeting in person. In terms of timeline, it can vary. I would budget between 4 and 8 weeks for everything to get done end to end. It can get done more quickly, but I would budget 4 to 8 weeks. The part of that is it's really dependent on which office in Portugal it gets assigned to. Some offices are faster, some are slower. And the costs can vary based on the attorney. In general, the pricing that I see is between 1,600 to 2,000. and expect another 220 in government fees. If you do a custom business name, if you want it urgent, there'll be a few additional fees on top of that. But those are kind of the general prices in terms of what to expect. Things that you'll need to create the business. Okay, so a lot of it is what you're going to expect. Legal name, fiscal ID for each owner, your government identification, which is probably going to be your passport, proof of address. You'll need a legal address for the business. So a lot of people might use their home address, their virtual addresses that you can do as well. So if you just search in Google for virtual business addresses, they'll collect your mail, scan it for you, send it to you, etc. Especially if you're creating the business from outside of Portugal, you need to have a Portuguese address. Naming the managing director. So there's a difference between who the owner is and who the managing director is. They can be the same person. They usually are. But you can also be the owner, but have somebody else be your managing director. So you need to name who the managing director is. If it's a partnership, you need to determine what % ownership each person will have. And then identify the type of business activity. So are you a restaurant? Are you an accountant, etc.? And you can have multiple business activities. A lot of times there'll be a primary business activity, and then you might have 3, 4, however many secondary activities. You need to determine the share capital. We're going to talk about that on the next slide. And then if it's corporate ownership, so if you're a business is going to own, you'll need a fiscal ID and a government ID for each of the people who are corporations that are purchasing the business. The corporation document, if it's outside of Portugal, it has to have an apostille. All right, and just a reminder, you don't need to be a Portuguese resident in order to own a Portuguese LDA. So you can live outside of Portugal and still own a Portuguese LDA. Okay, share capital. So we get a lot of questions on this. So share capital is basically it's the money that you're putting into the business, usually at the beginning, to get the business started. You can, in the future, even if it's 5 years down the line, you might increase or decrease your share capital, but it's a process. Again, you're going to actually have to work with an attorney because your articles of incorporation have to be adjusted. So it's not easy to change the share capital, but it is definitely doable. Usually, it's the money that you're starting the business with. It can be as low as €1 per owner, and it can be as high as you want. I don't think there's any cap. Where this really comes into question, a lot of people say, okay, well, if it can be €1, I'm going to do that. There's a trade-off here. On the one hand, if you have a really high share capital, you have money that's basically tied into the business. Once it's added as share capital, it's like I said, it's fairly difficult to get back out until you sell the business. So you have capital that's kind of tied up there. And again, you can reduce your share capital, but it's a whole process. You're making big changes to the company. On the other hand, is credibility. So your share capital amount is public information. Places like banks are going to ask what your share capital is. Your vendors, your customers, a lot of times you'll see this on invoices. And so if you have share capital of €1, you're going to have very low credibility. It's not like anyone can start a €1 business, right? The more money you have as share capital, the more credibility it gives you. There's no right answer. Generally speaking, over 5,000, you're credible. Less than 5,000, people might be kind of giving a second guess or a second look. So kind of keep that in mind as you go. Okay, so if we look at the end-to-end process when you're creating a business. So regardless of the 3 options, so we mentioned you can have an attorney do it for you, you can do it online, or you can go to Impresa No Aura in person. That's a submission request. There's going to be some processing time. The business entity itself gets created. Once that business entity is created, you basically have 2 weeks to open a business bank account and have an accountant activate the business. Because again, with an LDA, it's organized accounting. When it's organized accounting, you always have to have a Portuguese certified accountant that is assigned to that business. And they're actually like legal representatives of that business. So it's a legal connection. And the business is going to activate that. So that means that they're going to basically go into the tax portal, they're going to get everything set up, they're going to say the business is now active, etc. Common questions we get on this. So with the bank account, can you have a Revolut business account? Yes, you can. It works great, except there's no direct connection to pay government bills. So with a traditional Portuguese bank, if you go online, you go in like your online banking, you can pay your IRS, your VAT, your Social Security, all directly in the portal with just like a code, a reference code or whatever it might be. So you can make the payments really easily through your online portal. Revolut doesn't have that. And so usually what we see is if somebody has a Revolut account, they have kind of two options. One is that they go to an ATM that has MBWay and they can make the payment through the ATM. The second is that they have a traditional business bank that they send money to and then they send it out of that traditional bank. So that's a question we get a lot. In terms of which banks to use, we can talk about that offline. What I would look for is making sure that they have really strong online capabilities. I think most of the customers that we work with prefer to do most of their banking online rather than in person. And so look for a bank that's going to try to simplify processes and make their online capabilities really good. And then again, an account is going to activate. We cannot activate a business without the IBAN. And so a lot of times there'll be this kind of back and forth during the creation process where the bank will say, well, we want to see the letter saying that you have an accountant or that the business has been activated by an accountant, and the accountant will say, we can't activate it until we have a bank account. And so what usually ends up happening is the bank account gets started, they give you the IBAN, we activate the company, and they complete the opening of the bank account once they have that activation letter. Okay, another thing that's important during the part of the process is the livro de atos. And this is basically the official meeting minutes for the company. And so you'll see this in a few different formats. A lot of people still use a physical book. And that's actually quite normal because they want you to actually sign it and everything else. There are online options for this. A lot of times they require an ongoing subscription rather than a one-time purchase. So it's up to you which one you want to use. Just make sure it's truly an option here in Portugal. But the important thing here is that you actually do need to make notes, make official meeting minutes as you have major things happening in your company. So the first one is that you open the business and who the managing directors are. When something gets changed, which could be you've moved to a new address. Each year you need to do this with your financial accounts. If you're changing who the managing directors are, you're changing the share capital, the type of business. So maybe you add a new, maybe you start with whatever, a certain type of professional service, and you add a new service, which is a new category. You might be adding a business activity, and so that would be part of that. Any general meeting of partners should be recorded there. When you buy a large asset, so if you buy real estate, for example, through the business, then that should be recorded. If you sell, again, it's going to get recorded. So people that are going to ask to see this are going to be your banks, the tax authority, Social Security Administration, basically any administrative figure might ask to actually see the official meeting minute book, so the livro de atos, to confirm basically that what you said is happening is happening. It is a bit old school, but it's still very much in effect. So just know that needs to be something that you do right at the beginning is get this book so that you can make the note saying that the business has been created and activated. Okay, excuse me. Quick pause for any questions on how we're looking.
Jaysin, we have quite a few questions, but before we get into those, I wanted to ask, can you allow people in? I can't allow participants in, and I'm getting a lot of messages saying that they're waiting.
My screen, I don't have anyone showing the
I also don't.
I wonder if maybe after a certain amount of time they're not allowed in. I'm not sure.
Maybe.
Yeah, on mine, unfortunately. Yeah, unfortunately, I don't have anything saying that somebody's waiting. Let them know that we're recording the call and we'll send it out
Yes.
afterwards.
Perfect. We do have quite a few questions. Somebody asks if they have started the process of opening the LDA, but didn't do the inicio de actividad, so they didn't register the activity. Do they cancel or do they close the LDA?
I would actually turn that over to Daniel as the lawyer. Daniel, did you hear the question on that?
Can you please, I was trying to search the question here. Can you please repeat it, please?
It's the first question, Daniel, no problem. If we have started the process of opening the LDA, but did not do the inicio de actividad, do we have to cancel or close?
You'll need to close the company, unfortunately. Because once it's opened, once it's registered within the commercial registry in Portugal, you can close down the company via two routes. Either you declare bankruptcy, and this is cumbersome, this needs to be declared by a court. But if the company didn't do anything, it was just incorporated, and even the inicio de actividad was not declared, then you'll need to produce a minute stating that you don't owe any money to anyone, and register that minute within the commercial registry and close the company in that route. So please don't leave the company as is, because that can generate expenses, that can generate notifications from Social Security and tax authorities. If you don't want to pursue with the remainder of the process in terms of the company, it's not useful anymore, please close it down. Otherwise, that can be an expensive ordeal if you just leave it as is, okay?
And we have got a second question. I think this was when you were showing the differences between LDA and independent activity. Are there potential differences if looking at EFICI?
Yes, and so I'll tag team this with Daniel again, but one of the big things to keep in mind with the PC and with the NHR is that it applies to your foreign income. Your income in Portugal, it only applies if it's a high value added activity as defined by the tax authority, which is a bit gray. So that's one of the big things to keep in mind. It only applies to high value added activity. And so it can apply with independent activity if it's a high value added activity that you're registered for with your independent activity. It can apply if you're the managing director of an LDA, because they consider that a high value added activity. So it again kind of comes back to it depends on what you're doing in your situation. But that's kind of where they apply in each situation. Daniel, did I miss anything?
Nope, on point. I don't have anything else to add.
Another question. I will work from home for my business, but is it allowed to use my husband's office address in Portugal as a legal address?
Yeah, should be fine.
Should be fine. Let's coefficients for physical products, food business. I think you did cover this, but it's a question here.
I would want to look that up. So if it's a restaurant, then that is a 85% coefficient, I believe. But it sounds like if you're saying physical good, it sounds like maybe you're producing food for sale at like a grocery store. So something like that, it's very specific. I want to look it up to see where it's going to fall. So that's something we can look into outside of the call if you like.
Okay. And then going back to the question of not having done the registration of activity on the LDA, the same person is asking, what would be the consequences if you open, i.e. do the inicio de actividad in 2 years' time? So she opened the company, she set up the LDA, but she hasn't done inicio de actividad. What are the consequences if she only does the inicio de actividad in 2 years?
Jaysin, I don't know if you want to take this one. I think that there's a penalty for opening the activity after the 15 days. But I think that's probably it in terms of a tax perspective. But I don't know if you have anything else to add, Jaysin, over there.
Yeah, what I'll say is, so it's exactly that. There's a fine. What we've seen, so the rule is you're supposed to do it within 15 days, and if not, then there could be a fine. If it is a few days after that 15 days, I've yet to see that fine actually happen. After 2 years, I'd say you're probably much more likely to see a fine come through.
Eventually, and I don't know if you do agree with this, Jaysin, and interrupt me if you don't, but opening up the activity, then suspending it may be a better idea, and do the communications to Social Security as well, that the manager is not earning any income, and suspending it as well, because you can suspend the activity of a company. So probably the best procedure is to open up the activity, comply with that, so you avoid any penalties, and then just after that, suspend the activity and communicate this to the tax authorities and to Social Security, so everything is lined up, and then the company can be dormant for the next 2 years. This is my take on it. I don't know if you do agree, Jaysin.
Yeah, I think it depends on the situation. If they don't need the company anymore, activate it, get it done, but then close it. If you want to use it in the future, then I think suspending it until you're ready is a good option.
They are asking what the fine, how high is the fine for late registration? Any idea?
Off the top of my head, I don't know.
I don't have an idea. Okay, we can move on, Jaysin.
Okay. And again, we'll have a Q&A session at the end as well. Okay, expenses and sales invoices. So I was trying to think of like a really catchy name for this slide, and I just kept coming back to it's super important. So this sounds like the most boring topic that you'll listen to. It's potentially the one that will save you the most money and keep you out of the most trouble. So let's hop in. We're going to start with expense invoices. And I thought it'd be good to start with an example. So what I'm talking about here is expense invoices. So when you are buying something for your business. Let's do an example where we're buying something for 100 euros with standard VAT of 23%, means you're paying 123 euros. We're going to compare if you submit your invoice correctly or if you do not submit your invoice correctly and how it affects things. Because again, this is going to be very important for you. So, like I said, you bought it, we'll call it a widget. The widget was 100 euros. There's 23% VAT. So the amount that you pay at the cash register is 123 euros. That's the money out of your pocket. But if you submit the invoice correctly, you get to recover that VAT. So when you have customers that pay you VAT, eventually you're going to pass that on. You reduce that balance. That's money back in your pocket. If you do not submit the invoice correctly, and we'll talk about how to do that, you get nothing. Even if it's very clear that it was for the business, you get nothing. If you submit the invoice correctly, you reduce your taxable income. So the tax that you pay on your profits goes down. So in this case, you save another 19 bucks. If you don't submit the invoice correctly, then you get nothing. This time you get something. If you submit the invoice correctly, there's no additional tax or charge. If you do not submit the invoice on top of the amount you already paid, not being able to recover your VAT, not getting to reduce your taxable income, you do get to pay an additional tax of 50% of the base price of that item. So here's what it costs you. In real terms, this is what it costs you if you do not submit an invoice correctly for your business. You do it correctly, the total out-of-pocket after benefits is 81 euros. So quite a bit less than that original 123. If you do not, you actually end up paying 173 euros for that same item when you pull everything together. And so when we talk, or when your accountant talks to you about getting in your invoices and they're chasing you and they're asking for these invoices, this is what we're talking about at the bottom line. You're paying double. You're paying double if you don't get that invoice in. So take the documentation side of things really, really seriously here in Portugal. So when we're talking about submitting an invoice correctly, what are we talking about? That means that the invoice, when you buy something, you have to put your fiscal ID on that document. So if you're doing independent activity, that means if you're doing simple accounting, that means that it's your personal ID. If you have an LDA, and sorry, I take that back. If you have independent activity, whether it's organized or simple, it's going to be your own personal fiscal ID, your NIF, because everything is in your name. If you have an LDA, then it's going to be the fiscal ID of the business. People a lot of times will call it the business's NIF, the fiscal ID, or the NIPC. It's all the same number. It's the fiscal ID for the business. That has to be on the document. So that doesn't matter if you go to a restaurant, you guys get a meal, you have to ask them to put the fiscal ID on the document. Anywhere in Portugal, it has to have the fiscal ID on the document. Outside of Portugal, you can't always do that. So if you buy something like an airline ticket, let's say, from a company outside of Portugal, they might not give you the option. And that's okay. We can still make it work without a fiscal ID if it is a non-Portuguese invoice. But we highly recommend you want to have it on there, or it's going to be a headache. What you will see in a lot of international invoices is they'll ask you for your VAT ID. In Portugal, your VAT ID is the letters PT for Portugal, and then your fiscal ID. So you might not see a place for fiscal ID or for NIF, but you'll see something called, they'll ask for your VAT number or your VAT ID, and that's where you're going to put your fiscal number, which is just going to be PT for Portugal, and then your fiscal ID. So get your fiscal ID on the document, and then submit the document to your accountant, however they want you to do that. And we'll talk about that in a second. So best practice for invoices is, again, make sure you get them in. And the way to make sure that you get them in is to do it as soon as you get them. In Portugal, I'm sure you guys have seen this, you'll see the brand name of a company, like Elevate Accounting. And when you get the bill, or when you see the transaction in your bank statement, it's a completely different name. So for us, our legal name is Modernized Business Experts Unipersonal. It's very difficult a month later, 2 months later, to remember what the transaction for a company you've never heard of is compared to what you actually bought. And so going back and trying to find your invoices, after they've gotten lost, they got accidentally deleted, you lost the paper, flew out, it becomes a huge hassle. So the best advice I can give you is submit your invoice as soon as you have it. Some accountants prefer to do everything on paper. Every accountancy firm is going to have a different preference. At Elevate, we are 100% digital. We do not want your paper at all. And so we give you 3 options, and some of these options might be available with other accountants as well, which is, if it's a paper document, you can take a photo with an app on your phone. So again, if you're at a restaurant, I don't leave the table until I've taken a picture of that document and submitted it. Full stop, like I don't leave, or I'll stand at the counter until I've taken a picture. If you get your invoice via email, you can send it, again, depending on the accountancy firm, to a custom email address. So if you think of like your Vodafone invoice for internet and phone, they usually email you an invoice that comes as an attachment. You can just forward that on to a custom email address. It will go to the software and it's done. You've submitted it. And then for us, we have a special program. All this is the same program that will actually connect directly to portals. So if you use Google, Microsoft, Amazon, Facebook for ads, any of those places where you actually have to sign in and go to their invoicing section and then download the invoices, this will actually connect to those directly. You sign in once, and then as invoices get created, it automatically pulls it in. So the whole goal is to make sure that invoices aren't getting lost between when they get generated and getting it submitted to your accountant, and to try to take off as much admin work as possible. I promise you it is more work to go back later and try to find all these invoices than to do it as they come in. So that's my plug in terms of kind of best practices to staying on top of things. Is don't make it a process. Just make it as soon as it comes in, as soon as you see it, it gets filed away correctly. Excuse me. Okay, so for business expenses, in Portugal, keep in mind, Portugal is much more strict than other countries when it comes to what they'll count as business expense. So in the US, for example, if you can make a reasonable connection between whatever the expenses and whatever your business is, they typically accept it. So it'd be like, oh yeah, I went to Hawaii for a photography shoot, right? We know what. Business, they're very, very strict, and it needs to be directly tied to the business. So I would encourage you not to get creative, to try to tie business expenses to the business that aren't or have only a slight connection. Autonomous taxes are something that are added to your business expenses in some cases. And so we talked about there's an autonomous tax if you don't submit the document correctly. There's also autonomous taxes for basically type of expenses that the tax authority wants to ensure don't begin to inflate artificially. So again, kind of using that Hawaii example I gave before. So business meals and travel expenses, it's a 10% autonomous tax, or if your business actually has tax losses, you're not making money, that goes up to 20%. So again, they want to make sure that the business, the legal entity, doesn't become a dumping ground for your expenses. So you're still much better off in terms of the overall tax picture versus paying for it out of your private funds, but it's less attractive with this autonomous tax. The same thing goes for travel allowances or private vehicles, expenses related to a private vehicle. In that case, it's a 5% autonomous tax that gets added, or if you're not profitable, it's 15%. Client gifts. So we have clients that are like realtors, for example. When they sell a house, a lot of times they'll buy a gift for the client. So these get looked at very closely by a tax authority, and they're going to get looked at closely by your accountant as well, because if they do it wrong, the tax authority is going to be on them. So it needs to be 50 euros or less for a client gift. It cannot exceed 0.5% of your prior year revenue. And it's still, even if it meets those, it's still going to be assessed on a case-by-case basis to make sure that it actually makes sense for the type of work that you do and what you purchased. And I said this before, but I'm going to say it again. Expenses that don't have an obvious business connection are going to be questioned by your accountant, and they're going to be questioned by the tax authority. I promise it's not the accountant being a jerk or being nitpicky. They will get in trouble and potentially lose their license if they're submitting things that aren't business expenses, or they're not categorizing them as non-business related in the accounting. And the tax authority, if there's one thing that Portugal does efficiently, it is their taxes, and it is their tax management. So it will be questioned, it will get looked at. So this is where you want to be on the straight and narrow. Okay, so you're just talking about expense invoices, which is when you're buying something. Now let's talk about the sales invoices, which is when you're selling something to a customer. The big thing here is just that you have to have a Portuguese invoicing system. There's kind of two ways to go about that. So we'll go here. There's a lot of different systems that you can use. And so these aren't recommendations, they're just common programs that you've probably seen. So based on what you're doing, there's different ways to set this up. You can go with a general option. So Invoice, Express, and Maloney are both general options. You can use them in a lot of different ways in a lot of different situations. And one of the nice things about these types is that they usually will have an API or some sort of connection to other programs. So let's say you are doing e-commerce. Your checkout is probably going to be done using Stripe, right? Same thing like a Shopify site. It's going to go through Stripe. These programs will connect to Stripe so that even though Stripe is creating an invoice, a Portuguese invoice is getting created that matches that on the back end. But you always have to have the Portuguese invoice. If you're doing like very few invoices, you can use the invoicing platform that's built into your accounting platform. So Central Just and Talk Online, for example, this is great for, like, we will be moving to Central Just soon. If you're a consultant, if you're doing anything where there's not like a high volume, these can be a good option. You can still brand them and everything else. And they have some that are built into the POS system. And so, for example, with the restaurant software, these are two, ZoneSoft PMS and then TMBill are popular for restaurants. And they're built all around restaurant technology. It's your point of sale system. It tracks all of the, exactly what was sold. It has invoicing built in. And so depending on your industry, there may be an invoicing program, point of sale system that is designed specifically for your industry. So again, none of these are recommendations. It's just kind of broad examples, but look into what might be the best option for you based on what you're doing. Okay, with that, I will turn it over to Daniel to talk about hiring, firing, and navigating employment law. And Daniel, I don't think you'll be able to control the slides, so just give me a yell when you're ready to switch.
All right, so I'll try to be as brief as possible. The labor law is a world within itself, so it may be complex. And my first advice is before you hire someone, do contact a lawyer, do see if everything is to the standard that it should, because a bad work contract can lead into nasty surprises and into lengthy court battles. For people that want to set up a company in Portugal, usually dealing with the labor law is what causes the most surprises, because this is substantially different from what happens in the US and the UK. So this is the first thing that I want to emphasize. If we can flip to the screen. So the first difference that I would like to outline is what is called a service contract, or a green receipts, or recibos verdes in Portuguese, or an employment contract. If the person doesn't have any ties with the company in terms of work schedule, if you don't provide the computers, if the person just is hired for a service and delivers that service, that person is considered a service provider, and you just pay for the service. As for instance, it happens with us lawyers or with accountants. The entrepreneur pays for a service, the service gets handled. We are not considered employees of any of the clients that we have. But there's something that you should be aware of in the Portuguese law, that if you hire someone as a service provider or contractor, but that person is sitting down on your firm all day, every day from 9 to 5, you provide a computer, you provide other means of work, then they can go to court, sue the company to transform that service provider contract into an employment contract. So this is the first difference that entrepreneurs should be aware of. Sometimes people try to facilitate and just have the green receipts, the contractor, but then they can have a nasty surprise later down the line, because a lengthy court battle can ensue. So if someone is being hired as an employment, the proper employer, or employee, the proper contract should be established, and the proper defenses for the company should be in place. So a good established work contract can make a world of a difference in terms of what happens in court, or what happens in terms of dispute. So formal written employment contracts required. This is a norm in Portugal. All work contracts should be in written, and if they are not, there's a presumption that they should, and what the terms and conditions will be the default ones in the Portuguese labor code. So it's better always to have the contract in writing with the terms and conditions set forth by the company and the employee, instead of just resorting to what is by default in the Portuguese labor code, because if it's not in writing, it should be, and it will revert to the standard norms. Then requirement for the existence of a temporary need. This is for temporary contracts, because there's a big difference between long-term contracts or non-term contracts and short-term contracts. The short-term contracts, you need to justify why you are hiring, or the company is hiring someone that that is not for the long run. So the long run is the default in Portugal. The non-term contracts, this is the default mode in Portugal. If you're not hiring for the long run without a term, then you need to have justification. Is it just a project? Is it just an increase on the workload that the company had? What is the justification that you're not hiring this person without a non-term contract? So the three types of contracts are mentioned here in the slide. It's the permanent or open-ended or non-term contract. This is the default mode. This is what the Portuguese law and legal system wishes the companies to have. Then you have this fixed-term contract and uncertain term contract. So, pardon. For these two situations, the fixed term is you put 6 months on a contract, you had a workload that the company was not expected, but you know that it will only take for 6 months because it's a project. See what's happening with the rains and the repairs that are happening now. They know that this extra workload will take 3 months to resolve. They hire someone just for to face this extra workload. but then that person doesn't have a permanent job position. So in some situations, in some areas, especially in restaurant business where there's cyclical work, the fixed term or uncertain term work is what it should be the contracts used. And then you have part-time or temporary agency work. So the temporary agency work, you just hire that temporary agency work. They'll search for the type of qualifications and person that should be hired, and the temporary agency is the one dealing with the types of contracts and dealing with all the bureaucracy. You're paying for a service, and that agency is dealing with the consequences of having a work contract or not. Or eventually a part-time, if the type of position that you're looking at is not something that has permanence, or it can have permanence, but you don't need 8 hours of work for that job position to be filled. Let's say that the job is done in 3 hours, 4 hours, you can hire part-time. Things to be included in the contract. So what is the role of that person? What is the type of work that is being developed? It can be or it should be as descriptive as possible, and it should have some nuances as well, that some adjacent roles can be played out as well. So someone that is working for the financial department in a company should have adjacent functions to it, like administrative work. So this should be enrolled in the contract, because if it's not clear, then a dispute between the employee and between the company may arise. Salary, of course, this is a given. It should be clearly stated what are the salary conditions, what is the workplace. So in terms of if the person is working full-time in the company headquarters or anywhere else, if there's any home office, all those things should be in the contract, and as well the working hours. If it's not in the work contract, again, this will go into the default mode of the labor code, and we strongly advise to have a well-worded work contract, because that can avoid a lot of problems. One thing that is not mentioned in this slide here is, if you're hiring foreign workers, so non-Portuguese citizens, you should check what is the status of that person in Portugal. Do they have a work permit? Are they allowed to work here? Do they have a residency permit? Because if there's an inspection in the company and you have illegal aliens working in the company, then the company can suffer FP penalties, as well as the person that is not legal in Portugal. So please do assess the status of that person, if it's someone that you can hire. Otherwise, the penalties can ensue. And do keep a physical folder. I know that nowadays people don't like to keep physical folders of anything. They like everything online, but we as lawyers usually advise, keep a folder, a physical folder for each one of your employees, with a copy of the work contract, a copy of the residency permit or the citizen's card. Any updates on the address should be kept on a physical folder, because if there's any questions on ACT, and ACT is the Portuguese authority for work conditions, you'll have everything ready to deliver and to present if there's any questions. So if we can move to the next slide, please.
Hey, Daniel, do you mind if I
Of course.
encourage you to? There's two things as you were talking that I thought about that you and I hadn't spoken about before we got to this. So can you talk about renewing? So if you do, let's say, a 6-month fixed term contract, being able to renew that, and then if you can also touch on trial periods. So the initial part of the contract when maybe things aren't working out.
Mm-hmm. So the trial periods is something interesting. They depend on the duration of the contract, if it's a long-term or an unfixed term contract, or a short-term contract. So that depends on the law. And depends as well on the qualifications of someone. It can go as high, from memory, to 180 days. If it is someone with high qualifications on a non-fixed term, and sometimes is as short as 15 days. So it depends quite a lot on the type of contract. And if the contract says one thing, but the law says one other thing, then what prevails is the law. Especially in labor law, the law is developed to protect the worker. So if there's something illegal in the contract, let's say that the trial period would be 2 years. This is clearly illegal and it's not valid. So if you decide to terminate the contract after 1 year with that prospective 2-year trial period, the employee can sue and you will win for sure. So a lot of stuff that can be written in the contracts, if it doesn't correspond to what it's in the labor code, in what the Portuguese law states is that is an illegal clause. What is valid is the labor code. And your other question was regarding the, I'm sorry, can you repeat that?
Yeah, renewing the fixed term contract. So for example, having a 6-month contract and then renewing it.
You're allowed to have 2 renewals. And this is something that I usually emphasize to all the clients, that you should have your agenda organized in terms of the renewal sequence of the contract. So if you hire someone today, you should put in your agenda when is the trial period, that's the first thing, and when the renewal sequence will happen, as well as when should you send the notice period, because if you don't want the contract to be renewed, you need to send notice, a written notice stating that that person is going to be dismissed. Because if you don't send the notice within the correct timelines, the contract will be renewed automatically. And let's say that you put someone working for a firm and you say the contract is 6 months and it's not renewable. There's no automatic renewals, but the person keeps working over there for 8 months. And then you decide, oh, I don't want you here anymore, please go away, you're fired. Well, you can't do this. The contract was just transformed in a non-term contract. So having the deadlines and the timelines of the renewal sequences and the notice periods is really, really important, because that can save you a lot of back and forth with a worker if notices are sent within the legal deadlines and if the procedure is followed. I know it may sound too cumbersome, and it is, but if the right procedure is followed, then it avoids a lot of pain afterwards to resolve the situations. All right. So if we can jump into the next slide, please. So general work standard conditions in Portugal, it's usually 8 hours per day, 40 hours per week, although extra work is possible within our Portuguese legal frame. The extra work is paid on a different level than the normal work. And usually in Portugal, this is 9 to 6 with 1 hour of lunch, usually between 1 to 2 or 12 to 1. Other configurations may be obtained, but this is the default mode. The Portuguese minimum wage increased to 920 euros. So it doesn't matter what type of role. If a person is working 8 hours, the minimum wage needs to be paid, plus some benefits like meal allowance and the 22 working days that is mentioned here, public holidays, of course, and we do have some nuances with the public holidays. The perfect example out of this is the carnival that we're having on next Tuesday. It's not a holiday, but everyone knows that it's going to be a holiday because the government usually approves let's call it a special holiday for carnival. So next Tuesday, everything that is public will be closed down, and usually offices will close down as well. For instance, our office will follow that, and we will be closed down on next Tuesday because the government has determined that this is there's no point, for instance, for us as a law firm to be working if the public entities are closed. The 22 working days paid of annual leave, this is a minimum. If you want to provide more to your employees, that's fine. Let's say that you want to have 30 days, that's totally fine. This is the bare minimum. The employees need to have social security registration. This is something that you should do on the first day that the person is working. Once you sign the contract should be scanned and immediately communicated to the accountants so they can do the communication to social security, because otherwise, again, fees or penalties may be applicable, and the company needs to discount social security for the workers that they have in the payroll. And one thing to be mindful of is holiday and Christmas allowance. So in Portugal, usually you're paid in 14 months. So in the US, it's normal to negotiate the salary globally. So you negotiate the yearly salary. In Portugal, it's more of negotiation on a monthly basis, but everyone knows that they will be paid in 14 months. 14 months. The exception to this is that you can be paid in duodécimos or twelfths. The extra salaries will be divided and will be paid every month. And for some people this works out, but this is an agreement between the company and the worker. I think it's actually better for the companies to pay the twelfths because you can rearrange finances with the tax year. If you need to pay in 14 months, then you get into August and the cash flow may not be there. And then you get into December when you need to pay the 14th month and the cash flow may not be there. So in terms of company management, I think it's better to pay in the 12ths, but this is a negotiation that needs to ensue with the workers. If we can jump into the other slide. So, as it's stated here, salaries are on a monthly basis, and the non-standard situation is paying this on the 12ths. Lunch subsidy and the taxation here. So for this year, for this tax year, from memory, it's €6.15 that you can do transfer of money to the worker, that this is not taxed. If it's more than €6.15, then this can be done, but the remainder of the money will be taxed. Or eventually you can hire companies that provide these meal cards and have a €10.20 per day. This is not taxed. So if you want to provide more, that's all right, but then the worker will be taxed for it. A lot of companies will opt by this meal cards. It may be an interesting idea, especially because the meal cards in some situations may be spent in buying groceries and in some other expenses. So this may be something interesting for the worker. Are we able to jump into the next slide? So one or the most relevant key aspects that I want everyone listening to this webinar to retain is that it's hard to fire someone in Portugal. The termination of a work contract is seen as an undesired situation in Portugal. No one wants to terminate the contract, or at least the law doesn't want to terminate the contract. So the reality, especially for US entrepreneurs, that you can just state to a worker, well, you're not necessary anymore, you can leave today. This is not going to happen in Portugal. Or if an entrepreneur is doing this, well, he can face a lengthy lawsuit and an expensive one. And the consequences are quite dire if someone is fired without following the necessary procedure. Because let's say that court legal lawsuits in Portugal for labor law, they're considered urgent. But still, with an urgent case, this may take between 6 months to a year, sometimes a year and a half to resolve. And time is against the company, because if the court determines that the termination of the contract was unlawful, what happens is that, or two things may happen. One is the reintegration of the worker inside the company payroll, and payment of all the salaries between the time of the unlawful termination until the time that the court decides. And if this takes a year and a half, then this can be a lot of money. Or eventually, let's say that that person requested social and employment benefits. The company may pay for the time that that person was unemployed, the social security benefits. So as the social security benefits were paid to the worker, now the company needs to compensate the social security scheme because that termination was considered unlawful. So not following the procedure may really strike the company's finances for a year, because reintegrating someone and paying for a year and a half of salary or sometimes more may just damage a full year of earnings. So be aware of that. It's possible to fire someone in Portugal with just cause, as it is mentioned here, but the procedure needs to be followed. So if the procedure is not followed, if the right notifications to the right authorities, and if you don't grant the worker the right to respond, if anything in terms of the procedure is not followed, then this can terminate in court, and the just cause may not be there, and hence problems will ensue. So if a worker has done really something bad, the necessary procedure needs to be followed, and my advice is please hire a lawyer to do this, because otherwise, if you try to do it by your own in terms of being an entrepreneur in Portugal, this will not end up well. Something will be missing, and then the expense can be high. Another way to terminate the contract is redundancy or job extension or collective dismissal. So these are exceptions to the Portuguese law, but let's say that the market conditions did change quite a lot, and that a company that was invoicing $1 million per year now was cut back to 500K. Well, they will need to reduce the payroll, and this is a justification that can be used because of market conditions to do the collective dismissal. The job extension is something interesting to explore, again, because of market conditions. Some job roles may eventually not be continued, or redundancy. This is usually more when companies do merge and you have redundancy roles. The other is unsuitability for the role. So this is not the initial period that we were mentioning that companies may have to see if the worker is a good fit. Sometimes when the type of work does change and new technology is introduced, especially unfortunately for older people, they may not be suitable for the role because they don't know how to operate with new technology, and they just were not able to keep up with the advances. So in some situations, unsuitability for the role is a cause of termination. But the one that I usually advise is the one that it's mentioned in the middle. If there's a possibility of striking an agreement between the company and the worker, this is always the best choice, and this is the way to proceed, because this is the one that causes less friction. The company, of course, will need to sweeten up the deal, will need to put more money on the top of the table to convince the worker to accept a termination of an agreement. But this is where I see the win-win situation. The company avoids eventual litigation in the future. The worker walks out with some money in their pocket. And in some specific situations, if the quotas are there, even the social and unemployment benefit may be requested by the worker. Again, this needs to be assessed and done properly, again via a lawyer. No problem will arise in terms of the social and employment benefits. But if you have a company, if you want to dismiss someone, the amicable route is the route to go, because going to court, it's just a lot of friction, and I see that this upsets people on a personal level. If you are a manager of a company, and if you need to go to court and fight this up in court, this really upsets people on a personal level, and of course economically it does affect the company. So if there's a window of opportunity of doing this amicably, my recommendation is that it should be taken. And what I usually recommend to the majority of my clients is that the manager of the company should be the one facing the negotiations with the worker, because usually when lawyers get in, the workers will get defensive and will hire their own lawyers, and then more friction may ensue. So in the first recommendation, do this amicably with the worker on your own, with the support and the background of a lawyer, of course. But at the end of the day, it's something that if done well, you can terminate an agreement without a lot of friction, and this is doing it via an agreement. And again, I would like to emphasize the proper procedure is indeed mandatory, because if there's just one thing missing in terms of the procedure, the case, even if the company is fully right, can be mandated by the court to reintegrate a worker. And I'll give, I think, a perfect example out of this. Some bus drivers, public bus drivers, were not collecting the money from the fare tickets, and they were pocketing the money, like €2, €3. And this was discovered and proved that the workers were pocketing the money that belonged to the company. But as the correct procedure was not followed through, the company was mandated by the courts to reintegrate those workers that were basically stealing from the company. So even in such situations, if the procedure is not followed, the consequence is on the company. So please, 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 correct procedure is necessary. I think there's one more slide, correct? Yeah, so notice periods. This, again, varies by contract and by seniority. If there's qualified people working for your firm, you can extend the notice period. The severance pay is something that I usually recommend clients to start with the ACT portal. There's the Authority to Work Conditions in Portugal. They have a public portal that you can do the calculations of severance pay. This is the first step that I do recommend, is go there, do the calculation, because at least you'll have an idea on how much will the dismissal of this person cost in terms of striking an agreement. The only exception to this is mentioned here. The severance is not required if there's a just cause behind the firing of that person. That would be totally unfair. Some other payments on the termination of the agreement may be necessary. So if that person still has vacation time, and there's one interesting nuance for the companies, if they hire someone and that person is in the company for more than a year, the holidays will be considered, the 22 days of holidays per year will be considered all from the 1st of January onward. So even if the person doesn't do the full year in the company needs to pay those 22 days of vacation period that was not used by the worker. So this is something to be mindful of. And my advice is, don't let the workers collect a lot of unused paid time. So when it reaches to a certain time, just basically force them to take that leave, because otherwise, when the contract is terminated, this needs to be paid by the company. So training days, this is something important as well. It's mandatory by law. From memory, it's 20 or 40 hours per year. I'll need to check this out, but the company needs to pay training to all the employees. And this is training in the area that they operate. If the companies don't do this, and they usually don't, then they'll need to pay this as an extra to the worker when the contract is being terminated. And other things like premium and bonuses will need to be paid upon the termination of the contract. So well done offboarding with a contract that everyone is happy with will avoid litigation, because usually in those termination agreements, the worker does acknowledge that he accepts the payment and that no further litigation will happen. One really key nuance here is signature notarization on these agreements. If the worker signs the deal in the company, but then he goes home, he rethinks the situation, he talks with the family, he can revoke the termination agreement within 7 days. This is called the cooling off period, and this is something to be mindful of once you're terminating the contract. If, on the other hand, the signatures on that termination agreement are acknowledged or notarized by a notary in Portugal, then there's no cooling off period within the termination. And the final nuance here is that lawyers in Portugal can notarize signatures, but there was a big battle in court to avoid having lawyers notarizing these signatures, because the lawyer can be working for the company and ends in a clear conflict of interests. So if you want to terminate to terminate the contract with the worker, and this is done via an agreement, if you don't want the 7 days hiatus of cooling off period, the signature needs to be notarized within a notary and not a lawyer, because otherwise this can be reverted in court. I don't think that we have the slides, do we? I think this is the last one. Oh, yeah, there's one more. Okay, so strong protection against unfair dismissal. Yes, this is the prevailing key aspect that every entrepreneur should have. If you don't follow the procedure, consequences are expected, and those consequences are the reintegration or payment of the Social Security benefits to the Social Security scheme. So one other thing that is really relevant that is mentioned here. So pregnant employees or that have recently given birth have really big protections in the Portuguese law, and people in parental leave, so they are not discriminated against other workers in the company. There was, I would say in the past, probably not so much nowadays, but there was a tradition that when women would get pregnant, then they would be dismissed by the companies, and to avoid that, there was really strong regulations put forward in the law, especially in the 80s and 90s, to avoid that to happen, and they're still in place to avoid discrimination in terms of parental leave and women that are pregnant. So please be aware that this is something to consider, as well as parents with young children. There's some protections for people to leave early, or if they need to take their kids to school, or there's some nuances there for people with young kids. And one other thing that is not mentioned here is students. So if someone is a student and enrolled in a public university, they have a special regime that they have some time off to study and do their exams, and that's not considered legal grounds for dismissal, because the government wants people to study, and that does make sense. So I think that's about it, isn't it? Well, let's go into the key aspects. If you hire someone, mandatory to have a work contract really well worded, and to have the contract really drafted well will save you a lot of headaches. So if you just find the minute online, that may not be the best tailored situation. So please be wary of that. Portuguese law prioritizes job security. So in the UK and the US, people will change jobs quite frequently. That's not the same reality in Portugal, although slowly but surely we're walking in that direction. But it's walking, it's not running. So the job security is indeed something to be mindful of. And the employers must plan hiring and firing carefully, otherwise this may lead into expensive mistakes, and compliance or legal compliance reduces financial risks, and this is probably the most key aspect that you should retain. If things are well planned in advance and studied before, it's better than just for lawyers try to resolve the aftermath. So it's way easier for lawyers to advise entrepreneurs on how to do things on the legal side than to try to resolve an unlawful dismissal, because once it goes to court, then it's going to be really difficult to resolve in favor of the company. Do remember the example that I provided a few minutes ago, were people driving buses collecting money for themselves instead of the company, and they were reintegrated. So this is something to be mindful of. All right. So if you have any questions, I'm more than happy to address them.
All right, guys, and I know that we're at time. Our whole goal here is to provide as much value and kind of tell you everything that you need to know, which apparently takes more than an hour and a half. So we're going to continue. We'll also have this up online afterwards, the recording. But we are going to continue. We'll finish the entire presentation, even if we go past, but just to do a quick break to mention that. Anna, any questions for Daniel to come into the chat?
Yes, I've got 3 questions for Daniel, and then I want to go back and have 1 question for you, Jaysin.
Okay.
Daniel, regarding the written employment contracts, when you say written contracts, do you mean printed on paper, or is digital plus DocuSign allowed for employment contracts in Portugal?
It is. DocuSign is accepted in Portugal. I don't advise it. For the reasons that I was stating before. If you have an ACT inspection, it's better to have the physical documents with yourself. If the interpreter is well organized and he has a folder with the name of the employee, and he has all the documents necessary, like the ID card, like the work contract, and the addendums, all is in that online folder, then I would say that the physical documents are not necessary. But in reality, when I see the day-to-day basis of any company, when they are operating, the organization is not there. Yes, you can do this with DocuSign, especially when hiring at a distance. Having physical copies is not sometimes it's not as possible. So it's possible, although I prefer the old-fashioned paper.
What are the implications if we hire employees in different countries, specifically referring to digital remote workers?
So mainly insurance, and this is something that I didn't mention in the presentation. It's mandatory to have insurance for employees in Portugal, and if the employee is abroad, usually the premiums are higher because the risk is considered to be higher. That employee will need to have a NIF number in Portugal and social security number here, and you will need to pay taxes as well here. So this is something that it's a bit more nuanced in hiring people that are eventually doing remote work. But the main implication is indeed the premium of the insurance may be higher.
And then, are expired residence permits considered valid for employees? For example, IMA has a huge backlog and many people have them expire through no fault of their own and have to wait for months or years for renewals.
Yep, that's a really good question. The government, since the pandemic, has been approving law after law that extends the validity of the residency permits. They are resolving the backlog now, but they've done some legal extensions. So until quite recently, those legal extensions would be applicable. There's no extension at the moment, but as long as the person has a residency permit and any type of proof from AMA that they are trying to renew the residency permit, that is accepted within the Portuguese legal frame, especially because the residency permit is renewable within the initial 6 months. So let's say that someone had their residency permit expired on the 1st of January of this year. They can not do anything, but lawfully still renew the residency permit until the end of May. So until the end of June, because the 6 months have not expired. So for ACT purposes and for other purposes, as long as that person is still within those 6 months, it's all right. And if within those 6 months they do anything in terms of legal actions to renew the residency permit, let's say that they do a booking, that they have the proof of that booking, that is enough to not have the company with penalties. But there needs to be some input from the worker in terms of renewing the residency permit, and I think that the companies should be vigilant about that. So this is one of the things that I usually recommend for company owners to insert in the agendas is when will the residency permits expire of their workers, and what is the to try to nudge the workers into renewing the residency permits. The majority of people living in Portugal, they do this on their own. They don't need the employer to nudge them. But again, as the penalties in terms of ACT may be substantial, my advice is to keep an eye on that, because the worker needs to have some positive input in renewing the residency permit, and the company should have the proof of that input connected with AMA. As long as this is covered, then even if it takes 2 years to renew the residency permit, the company is covered.
Brilliant. Thank you, Daniel. We're going back to
My
the
pleasure.
questions regarding LDA and independent activity. Jaysin, the expense invoice example that you had on the slides, is this example for LDA only, or is it also for simplified tax, which I think the person means independent activity?
Yeah, so it's a good question. So remember with independent activity, you're primarily working off of the coefficient, where they're not looking at every single transaction and every single invoice. They're saying, okay, you're doing professional services, we're going to tax 75% of your income. Where it can come into play is when I was talking about once you start making more than 25,500 euros per year, they'll start asking for proof that you actually have business expenses, and they want to see, again, they want to see 15%. If you can show 15% of your income as business expenses, they give you the full coefficient. So in that case, yes, you need to have an invoice that's submitted with your NIF on there, or they will not accept it. So that's how it applies to independent activity.
What are the VAT implications, LDA versus simplified accounting or independent activity?
That is a very big, broad question. I will say, generally speaking, you're going to see and be working a lot more with VAT in the LDA. You can be VAT registered, and in some cases you have to be VAT registered with independent activity, but how that plays out is very, very situation specific.
And then the final question, I think, is for both of you. We are applying for funding from Portugal 2030 Compete. If we are successful, then we must set up a company. What is the shortest lead time to have the vehicle and bank account to receive the funding if approved? If the project size is 10 million euros, which vehicle is optimal?
So if the funding is 10 million, you're in LDA territory. So you're definitely going to go that route. Hypothetically, you could even go in SA, which we didn't cover today because it's not very common. But that's where it's more of a corporate, publicly traded company. In terms of lead time, your fastest option is to use Impresa no Hora, which is when you go in person. Assuming that you can find one that's open, you can get the appointment and you can get it created, and it's not going to be too complex. The second option I would go through, if you're not comfortable doing that, would be to go to an attorney and make sure they know that it is an urgent request, so they can request urgent processing throughout. You're still a bit at the mercy of where that's going to get assigned to, which government office, like which city is going to get assigned to for processing. Different ones have different lead times. So I would say minimum plan for at least a week, but realistically, you want to plan for a few weeks to get everything fully open.
That's it from my side.
Okay, perfect. We will continue on here. Okay, so we're going to talk about taxes. The big thing with taxes is that in Portugal, you pay each tax individually, and there's a lot of different types of taxes. So it's very easy as an entrepreneur in your business. It starts to feel like it's just an ongoing onslaught of taxes, and you can't figure out what you're paying and why. And so the goal with this part of the presentation is really to talk through that, so you know what each tax is and where it ties back to, and then also generally how it's calculated. Gallows humor here. Let's start with payroll taxes. So these apply, you'll see these when you have people on payroll, you have employees. Starting with Social Security. So Social Security actually isn't a tax, it's a contribution to Social Security, which provides benefits for you. The business, when you have an employee, the business pays 23.75% to Social Security of the employee's salary. So if their salary is 1,000 euros, you'll pay an additional 2,037.50 cents. So keep that in mind as you're budgeting. The employee, out of their salary, out of that 1,000 euros, is going to pay 11%. All of this gets sent in by the business owner. So even though you're only contributing as a business owner an additional 23.75%, you're actually going to pay both yours and the money that you withheld from the employee to the government. So that's Social Security, and this is the biggest additional cost that you'll see related to employment. IRS is the tax that is withheld from the employee's paycheck to pay for their taxes. This is just their generic income tax. But again, keep in mind, you're taking this money out of their paycheck before you send it to them, and then the business owner is sending it to the government to make sure that it gets submitted. The exact amount that gets withheld is dependent on a lot of things. So the amount earned, the family situation, the number of dependents, as well as like government programs that could be impacting the person, like the Jobs program and a few others. And again, the business owner, even though this isn't coming out of your pocket, you are responsible for submitting it to the government. So let's do a quick example for payroll. All right, so €1,000 salary, we're gonna say it's €1,000 per month. €1,000 salary, you pay 23.75% Social Security. So the total cost for you out of pocket is €1,237.50. But remember that we're talking about a monthly income here. So you have to multiply that by 14. And that means that there's the 12 normal months plus the Christmas holiday plus the summer holiday, usually paid in July. Christmas is paid in December. When Daniel was talking about duodecimos, basically rather than paying 2 full salaries in July and 2 full salaries in December, which really just kill your cash flow, you can agree to duodecimos, which is where you take 14, you divide it by 12, so it'll make actually a bit more each month, but you don't have that giant spike. So keep that in mind when you're planning, because a €1,000 salary is actually going to be, on average, €1,444 per month out of your pocket. Okay, on the employee side, you have a €1,000 salary, you're going to take out 11% for Social Security, you're going to take out whatever the right amount is for IRS. I use €35 as an example. So their net pay that they actually get in their pocket is €855. So this is how these taxes pay out. Just keep in mind, it's the entrepreneur, it's a business that submits the Social Security and the IRS for the employee. So if that number looks really big when you send it in, remember that it's not just your contribution, it's yours plus the employee's. VAT, this is the tax that gets added to the cost of the transaction. It's like the sales tax, effectively. There's actually 3 different rates. There's a standard rate, intermediary rate, and a lower rate. And it depends on what type of product it is. And so where you'll really see a lot of craziness here is in a restaurant, where different products, or even sometimes the same products, have different VAT rates depending on what type of product it is, where it's being consumed. So for your business, make sure you know what the correct rate is to charge. Because again, even in a restaurant, you'll have all 3, and sometimes the same product will have a different VAT rate depending on where it's consumed. The standard rate is 23%. If you're doing professional services, something like that, 23% is the norm. Depending on how much you're making and a few other things, this might get calculated. So the declaration will be created, and then the amount be due either on a monthly or quarterly basis. When you're getting started, it's usually going to be quarterly. And then you'll pay your VAT balance. And so what that means is that as you are making sales, you're charging your customers VAT. So that's the VAT that you need to send into the government. As you're buying things, like you're buying expenses, you're also paying VAT. And the VAT from those things that you're buying can actually reduce this balance that you have of things that you've been collecting from the client. You pay the balance of what you collected and then what you spent, and you pay that balance. So it's good to kind of know that. You can see I have bold and underlined, do not pay this late. So the tax authority is absolutely brutal when it comes to VAT. Even if you paid a day late, even if you had a great excuse, the minimum additional fine that they're going to give is 30% of the total. Keep in mind, VAT is a percentage of your revenue. So that amount could be more than your profit. Like this amount can put you out of business, right? So do not, hell or high water, do not pay VAT late because it comes with a nasty fine, and then interest will accrue on top of that. So if you remember anything from this, remember not to pay your VAT late. IRC is your corporate tax. So good news is that in 2026, they actually lowered the rates. I didn't mention this earlier in the call when we were talking about LDAs, but so the first 50,000 for small and medium companies is taxed at a flat rate of 15%. And after that, it's 19% on the remainder. So relatively low tax rates. Just keep in mind, this is the tax for your corporation. And then if you, for example, pay the remaining balance to yourself as dividends, that will be taxed at a personal level as well. So just keep that in mind. There's additional taxes besides just the IRC. When this is paid. So the year one, you first get started, the first year that you are profitable, you won't pay during the year. You'll actually pay after the year's books are completed and submitted. And then you'll pay tax for the entire year for year one on May 31st of the next year. So like basically the first year, you're accruing tax, but you're not paying anything out, and then it all comes due. Then the tax authority basically has a basis to say, okay, we're going to start collecting tax throughout the year, so it's not such a big one-time payment. So the way they do this is they take 80% of your prior year's tax bill, and they break it into 3 payments, one at the end of July, one at the end of September, and one at the end of December. So those are prepayments of what they're assuming the next year's IRC tax bill is going to be. And then when you complete the year, everything gets evened out, and either you'll have a little bit more to pay, or they'll give you a refund. Okay, so nearing the end here, I'm going to do a quick poll because I am actually quite curious to see if this is helpful for people. Let me launch this poll. If it'll let me. All right, I might not get the option to launch the poll here. So do me a favor, just raise your hand. You guys have that button. If this has actually been helpful in your learning things, because that is, this isn't a sales pitch. This is meant to really provide a lot of value. Actually, you might not even be able to raise your hand. You can't click my hand. All right, we will continue. Okay, so there are quite a lot of additional things that we didn't want to cover today because it gets into a long kind of grocery checklist. We're going to send out an email with a link to the notes, this presentation, etc., how to contact Daniel and I. And we're also going to have a link in there, which is like the essential documents and things that you need to do when you start a business. So there's insurances that you have to get. There's occupational health and safety inspections that you have to do. There's all these things. It's like a long list, and we put it into a blog post so you can just go through and do it basically as a checklist, make sure that everything gets done. We'll send that afterwards. I didn't want to include it in the presentation, or this would be a 6-hour presentation. To get in touch, you can contact us at support@elevateaccounting.com. You can contact Daniel at contacto@pellicano.com. And Q&A. Anna, what do we got?
You two were just so brilliant. There are no more questions.
All right.
I do have one thing to add, probably. This is entailing to what you said, Jaysin, is if you need to pay, or if you need to stop paying something because the company is going sideways, stop paying your suppliers, stop paying your workers. Do not stop paying the Portuguese state. Because they'll go after the manager. There's a separation between the company and the company owner. But if the manager, and sometimes the manager is the company owner, if they don't pay the taxes and the company goes bankrupt, in Portugal, the tax authorities can go after the manager's assets here in Portugal. So if you stop paying your suppliers and the company goes bankrupt, well, it is what it is. It comes with the risk of the deal. And if you stop paying your workers, there's actually Fundo de Garantia Salarial. This is a guarantee fund for wages that were not paid. So if the company goes under, I think until 15K, the workers will be covered. So it's better. The workers will have their support network, its unemployment benefits, and this Fundo de Garantia Salarial or salary fund. The suppliers, it is what it is. It comes with the risk of the deal or of being in the market. But if you stop paying the tax authorities, then they can go after the manager's assets, and that's it can be hurtful quite a lot.
Awesome. All right. Well, thank you everyone for joining. I really hope this was helpful. The goal again was to provide as much value as possible. If Daniel or if I can be of service, if you guys need help, definitely get in touch. I'll include our contact information in the email that we send so that we're easy to reach. And I wish you the best of luck with your business. Thanks, everyone.